If someone comes in just thinking you're in for a fight. That's what you're asking for. You're asking for a fight. It gives whole new meaning to go firk yourself.
What's my monetization? Then what promises do I need to do to justify the monetization?
Whole communities could be wiped off the face of the planet. I'm talking people dying in the middle of the night because a dam broke.
I want to dive right into this. Matthew of Relevate Power.
Yep.
The really interesting thing about your background that we're going to get to is the dynamic between your venture history, you're a many-time founder, you're now doing this in a space and a place that most founders probably could not understand, which is it's physical, it's in the real world, it deals with the environment. I have so many questions as to how as a founder you deal with that. Let me start though by asking this. Let's just level set. If you had to describe the company in the 3 to 15 sentence version of it, what is Relevate Power today?
So the short of it is that we buy up old hydropower plants. We invest in modern technologies and upgrade them so that they produce a significant amount of renewable energy and help transform lives in local communities. Our focus is really in rural America. We see what's happening with the electrification of the grid, trying to decarbonize our grid, trying to decarbonize our transportation sectors. And one of the fastest growing places where demand is just skyrocketing for electrification is the rural areas. The problem is the grid's not built for it.
Right.
And so if you're a solar developer, so we think, okay, the way you solve that problem is by rolling out solar and wind in these places, and we're just going to go and install that. The problem is our grid is like a really old highway. And in order to put a new on-ramp onto that highway, we call that an IX or an interconnection. Right now that takes between 4 and 5 years to get that on.
Wow.
So you might have a vision for putting solar in these communities, but you're going to wait 4 or 5 years to do that. What's neat is these old hydro plants come already with an on-ramp onto this highway. It might just be a little small, but it's a lot easier to make that on-ramp bigger than it is to get a new one put on. And so when we look at what's happening in our society where you've got data centers, right? This massive blooming of data centers and need for energy, where you're hungrier and hungrier for energy. Where are those going? Well, they're not going into the expensive real estate markets. They're going out into those communities. When we have range anxiety with our electric vehicle, why do we have range anxiety? We're not going to get range anxiety by driving around within our community. You have range anxiety because you want to go to the ski hill. You want to go for a hike in the woods. You want to go to your lake cottage. You want to go visit, mom and dad. So where do you need the electrification? Well, you need it out there where it's hardest to actually get it. And so trying to solve that problem in this kind of multidimensional way using something that people would say, well, that's not high tech. And so, it's the oldest energy producing technology we have. It's been around for a few thousand years. Just wasn't hooked up to a wire at first.
So it's so interesting. There are a couple interesting questions that come out of that for me. I want to start with this whole idea of the interconnection. It's really interesting when you think about, kind of your realization here, what brought you to it feels there might be a few things there. It's like these plants being either underutilized or needing a refurbishment or maybe not being used at all. I'm curious.
That's correct.
Then it's the notion of like you saying, okay, from a regulatory basis, approvals basis, there's some dynamic that maybe is easier and more easily arbitrage in this moment. But what made you realize that was an opportunity? Because it feels like we're going to get to like, okay, how do you select? How do you decide how to grow and all this other stuff? But the first notion of this has to be, okay, no one's doing this for seemingly no reason. Not no reason. There's a lot of hard work you're doing, but almost no reason.
So like anything, as a one of the places all of us founders are broken is that we're always looking out at the world and seeing a problem that can be fixed. At some point we should all look in the mirror, but the reality is that in this particular case, I had come off the back of an exit. I'd gone back into venture capital again. We were making, we wanted to be making investments into things that either we knew and we had passion about. And sometimes those things don't always intersect. And my partner and I got to this place where we were no longer really having fun. We weren't being rewarded from that experience. And we can talk more about that later as we get into the thing, because I want to stay focused on your question. But so we started to go back in our histories, and I got my founding in hydro as one of the many co-founders of an organization called the Columbia Basin Trust and Columbia Power Corporation, where we put 330 megawatt power plants on 3 non-generating dams on the Columbia River in Canada. And we put them into a trust for the people of the region to do and spend all the profits on social, economic, and environmental development work. What was so impactful for me at that time, that organization, by the way, now today is a $2 billion not-for-profit.
Wow.
That cuts $200 million of checks to a rural area of Canada that otherwise would have, had almost, let's put it this way. I don't want to say it had nothing going for it. It was stunningly beautiful, but in terms of economic value. And so when you actually break that down and you look at it, what's interesting about hydro is with solar, you can use the sun and I can use the sun. Your use of the sun doesn't hurt my ability to use the sun. It's not what we call a shared resource.
Right.
A river is an entirely different thing.
Right.
What you might choose to do with that very finite resource could dramatically affect me and everybody downriver of me. Right? And so you can look at that as a negative,
right.
But you can also look at it as a potential positive. What that means is it connects all of us. And if you can approach that in a unique way, you can not only drive massive economic value, financial value, but you can also drive massive social and environmental impacts as well that can transform not just a region in a spot in time, but now over generations and generations.
So it's really interesting because I feel like we're having this conversation not as much out loud with hydro, but with nuclear. It's like, okay, what communities are we going to be investing in? How do people feel about safety? How do they feel they're being rewarded, accordingly? When we're talking about the notion of, let's use we can either use the example of those plants or maybe an abstract. How should a community think about something like that in terms of if you were a founder and you had a gaslighting wand that you were using for good, and you're going to say, hey, here's a thing communities don't understand about you're obviously doing it as a company, but I wish communities understood how to participate in these projects or encourage them or attract investment. What's the conversation that's not happening that is maybe the first conversation you're having to have when you're approaching a new region?
Yeah, it's really interesting because some communities actually don't even know that they've got this resource in it.
Right.
So if you think about how many, if not most, of our interior communities in the Northeast U.S. were formed, if you were to look at a map, you'd be blown away. Rivers. And what was the thing that enabled that community to grow? Well, it was the first dam that went on that river. And that with that dam, what they did is they hooked up a water wheel, and that water wheel was tied to a shaft, and that shaft turned something. That might have been pulverizing wheat. It might have been chopping wood. It might have been doing all of these things. So it wasn't going to electricity at that time.
Right.
It was for the industrialization of our country. Well, if you look at that history now, you go back, that's, 150, 200 years of history, sometimes even more, of history around these dams. So they look at it now in modern times quite frequently in these rural communities is they just see a little waterfall,
right?
And if you have to work on your dam and all of a sudden that waterfall stops, you get phone calls. Right. That's the first time you get phone calls. They say, could you please turn the waterfall back on?
Right.
So it's quite funny. But to be able to, it's one of the most exciting and rewarding parts of what we do is to engage in those conversations with communities. And because what they realize is once you explain to them what's going on and they start having those conversations, the lake level behind that dam, all of these property values are tied to being on a lake. If that lake were to disappear. So sometimes you get these people going, we got to tear down the dam for fish, or we got to tear down the dam for this one. They're one stakeholder on the river. Right. But what if you did that? Think about all the other stakeholders. Right. What about the people that have been coming there with their grandkids and kids and for generations to fish every summer at their camp? What about the kayakers? What about the drinking water? What about the irrigation water for the local farmers? What about all of these things get transformed if you were to take that out? And so understanding, being able to just have that conversation in a way that actually, it's funny because they should be the ones telling the dam owner how important it is. What we find is, and I can talk about that in a while, but these things went into disrepair. They began to get ignored. New things kind of came up. And so these things began to...
Well, it's the same economic story as all of them, right? New things came up and sucked the realization of what was going on because at one point it was important. Then it became unimportant, became a waterfall.
Exactly.
And now you're going, actually, it can be important again.
This is now, exactly. And so what it is revisiting that exact thing is... time, trends and macro and trends do this. Yep. And at one point, your Fez is not in style anymore. and then just keep it in the closet because in a few years, it'll be back. It's gonna be back.
So let's go to the literals of that because it's really interesting. So we'll zoom in, then we'll zoom back, way back out to foundership and things of that nature. But from a product perspective or what you do perspective, when we talk about these actual moments of refurbishment, repair, maintenance, just maybe take us on a little bit of a journey. What's required? What's interesting from a technology perspective in 2024? And what's the business model?
So every one of these dams is a little bit unique. However, it does form a pattern over time. And typically that pattern looks like we come in and we take a look at the facility. And typically what we find is if it's an operating facility, you'll have anywhere between 1 and 3 staff people who are there for 8 hours a day, Monday to Friday. And they probably are working maybe, it depends on the size and the complexity of the facility and that individual as well. But they're probably working. Of that 8 hours, they might be spending 3.5 hours. And then really there's, generally sitting.
Standard spine,
finding other things to keep themselves occupied. So that's kind of one trait of these things. A second trait, and this is really important again, because as a venture capital private equity guy, what you look for is these kind of macro trends that create what I would call a volume opportunity, right? So in private equity, we call it a roll-up.
Yeah, right.
You see that there's a space in a market and you go, wow, if we were to buy every one of the hardware, these small local hardware stores, any one of them is not very profitable anymore. But if I were to buy 100 local hardware stores, boy, that becomes really interesting, right? Yep. So same kind of thought process is you start to look at the macro trends in this market. And what happened is, and this is really important, goes kind of why did the Fez get put in the closet?
Right.
So if you go back to the 80s, the government was really wanted to incentivize the development of more electricity onto the grid. So they created a program called PURPA. And what that said is if you build an energy producing plant that's less than 20 megawatts, the local utility at a minimum, you can find someone else to buy your power, but at a minimum, the local utility must buy your power.
Okay.
In other words, I don't need a sales force.
Interesting.
If I generate an electron under PURPA, somebody has to buy it.
And somebody being like, was that geographically defined?
Nope, the entire United States of America.
But then within that, next to that plant, there's that operating facility. How is that defined? Who was the forced buyer?
Well, the forced buyer is the utility. So let's say here it's, I don't know. Con Ed. Right. Exactly. Con Ed's a perfect example.
And they're forced to buy it in that moment.
And there's a price that they typically had to buy it for.
Right.
Now, what they also did is that they encouraged at that point in time, they said, if you build one of these things, we're going to give you a 40 or 50-year license to operate that. Wow. So that's the federal government called FERC, Federal Energy Regulating Commission.
FERC is a fun name.
Yeah, exactly. Yeah. It gives whole new meaning to go FERC yourself. So they created this opportunity to have a 40 or 50-year license under FERC if you built one of these hydro projects. Right. At the same time, we came up with this concept called a PPA, or a power purchase agreement. And so the way that infrastructure gets built, which is a little different than like software companies or these types of things. When you're talking large infrastructure, you can't build it off of venture capital, but also you don't need to.
Right.
Because if you structure it right, what you're actually promising is long-term predictable returns.
Right.
So you create this 40 to 50 multi-year power purchase agreement where the off-taker has to buy your power for 40 or 50 years.
Got it. So the price is baked in.
At a baked-in price.
Yeah.
So now what you do is you now get your cost to build is amortized over this period of time. Now you create a whole financial and capital market structure around that.
Right.
Right? So I can now debt finance this at extremely low cost of capital.
Right.
Typically now it's SOFR, it used to be LIBOR, but now you're like SOFR plus 2, SOFR plus 3,
right.
depending on how big and how well-known you are, right? So you've got that part of the market, and then you've got to come up with the equity piece.
Right.
So that's typically maybe a 60-40 or maybe as much as 70-30 if you've got a good track record, right? Now, but we're also talking hundreds of millions of dollars, right? As you start to stack these things up. So the net is that's how these things got built.
Right.
Now, fast forward, it's now the 20 teens, right? These things are now 35, 40 years into a cycle, and they're about to come up for relicensing. They're also about to drop off of their power purchase agreement.
Right.
And now you drop into what you call the spot market. And with fracking, what happened to power prices? Well, in terms of being a wholesaler onto the power in the energy industry, is power prices came down like this because gas supply went through the roof.
Right.
And we all, whatever it is, 80% of our at the time when this happened, of our energy is generated from natural gas, especially up here in the Northeast. Mm-hmm. So power prices go like this. Relicensing is coming up like this.
Wow.
Now, the other thing is when you're an infrastructure investor and you're coming up to the end of a period of time that you've held an infrastructure asset, what are you doing in the last 10 years of that asset? Well, you've already paid off the mortgage. So now what you're doing is something called harvesting cash. And so the last thing you want to do is invest
any dollars, jeez,
any maintenance or anything like this. So what's happening now in all of these rural communities is, and the dam might have been created in that community back in 1850, even 1770s, whatever it is. A dam was put in to power the lumber mill or whatever it was. Now the dam's still there. So in the 80s, someone puts a power plant on it to now generate, instead of mechanical energy, to actually generate electrical energy, right? And so now they've put that in place and in this community, and now all of a sudden it's starting to go into decay. Right?
It's almost demonetization, avoidance of any technology.
That is exactly what it was.
Wow.
And so now what you have is these assets that, and again, with nobody investing over the last 15, 20 years, really even, in modernization, these things are actually stuck back at the best case in the 80s. Quite frequently, we've got plants that are from 1903, 1918 that have the same technology that was in them since that time.
Wow.
You install a new turbine in that, and you generate immediately 15 to 25% more energy than you did before. And that's just a minimum. Then so that's one part of so now I'm getting to the actual answer to the question. Now, what are those opportunities? Well, there's new turbine technologies that you can put in. There's more efficient generation and switching gear and that kind of stuff. But most importantly to us, what we saw was an amazing opportunity for robotics process automation. So now what you do is you install hydraulic equipment to be able to drive all these different forces in this thing.
Set up measures, all the levers remotely.
With sensors and a local computer. And now everything is being done and say, okay, the water level is here. Let's increase generation so that we're not wasting any water 24/7. Now you're also able to get an alarm and say, oh, this has gone on. So now instead of having one guy or two or three, and I'm sorry, they generally are guys, they in these roles right now. We're trying to make change there, but it generally is. Instead of having 1, 2, or 3 at that one plant, now what I've got is I've got 3 people traveling around servicing 7 or 8 or 9 or 10 plants.
Yeah.
I've got a centralized remote operations center that's monitoring these things 24 hours a day, 7 days a week. So even if something happens at night, we're not losing that now. Whereas a guy was only there 8 hours before. Now I can actually make a call to somebody that's got to go do something at 1 a.m. because I see that that's happened and now I can go and address that. So not only are we generating significantly more power, we're now also significantly reducing cost, which now we're going to start to move into that kind of business model. The last thing that's super important that we're also doing that nobody was catching, what happens if you don't maintain a dam?
Breaks.
What happens if a dam breaks?
Oh, local flooding?
whole communities could be wiped off the face of the planet.
Jeez.
Like I'm talking like, I'm not even talking just like, oh, there's some water in our basement. I'm talking people dying in the middle of the night because a dam broke in their community.
Is that like a flash flood? I don't know if that's the right terminology. Or
a flash flood could cause that, but also lack of, you think about
rupture of some kind.
You're storing, let's say behind you is 1,000-acre lake, and you put a piece of concrete in front of that thing.
Well, and
how much force is on it?
And I'm going to guess, you tell me if this is the right way to think about it. All due respect to those workers who are there before you come in, they're now 8 hours a day, 5 days a week. They're mostly just walking around. The ability for them to actually identify a true risk, because I'm going to assume it doesn't happen, nothing is truly random. And so something happening at any of these facilities and a dam breaking is probably predictable if these were modern infrastructure with real specialists monitoring them at all hours.
Correct.
So this is not being observed.
I don't want to denigrate the people who work at those plants. I mean, they're
doing what they're supposed to do.
Now, don't get me wrong, we always find some, but that's not their fault. It's typically the fault of the management of that company. Right. Or the owner, right? Is that they don't set standards. They don't have safety programs. They don't do these. They don't train their people.
Right.
And so they end up with people that are a little lower on the skills side. Right. And then they don't invest in those people. Right. And so I don't at all want to blame those local people that are. It's the owners that were.
But it causes the risk. That's what causes the risk.
That's what causes the risk. And so not only, so again, getting out of more to that business model, right? So we really look at ourselves as having 3 customers. So the first customer, and again, we can move these all around. I'll start with the non-economic customer, because at the end of the day, that's still always at the forefront for us. As you're now getting a sense of, these assets are extraordinarily important to the history, to the economic productivity, to the social environment, and to the actual environment of these local communities. It's woven into the fabric of their history, their culture, and their being. And we are stewards of that asset, and they are our customer. We owe it to that community to keep this asset.
A positive economic and social contract.
Exactly. That's what it is. Exactly. So we,
by the way, which we in tech and venture capital and private equity is probably the best at realizing this compared to venture capital and founders in general. We underestimate how important that is at making returns, which I'm sure as you get through other stakeholders will realize, but their participation and want for you to do well might be unobvious to them. And so that's some of the education we were talking about earlier of like, how do you tell people about the resources they have and how it can be used?
Yep.
But that feels to me like the most underrated part of that.
And that's why I wanted to start with it, is because it's the one that actually most people just gotta go, what? Yeah, that's part of your business model, but it is.
Yeah.
It's fundamental to the business model, right? If you think about it, if we were to break that promise of that community's trust, what just happened? Right? Like, so we've just devastated any investor's returns because we broke a promise to the communities that we were.
Well, I'm sure they begin to locally legislate against you, become annoying, and I don't mean annoying in a bad way. It just becomes now a confrontational relationship.
Correct. So you can look at the stick side.
And then you're looking at the carrot side.
And based on my experience and what I went through at the trust, I'm looking at the carrot. Because that impact, I can actually measure. The second customer is the simplest one. It's we sell 24/7 renewable energy to local consumers of energy, users of energy, who have ESG or climate change, climate or carbon goals that they're trying to hit. And so that might be data centers, that might be, municipalities. It might be something like, a community power where the whole community wants to, support and buy.
This is also now energy. Me saying this might sound like I might be wrong about how to phrase this. Is energy marketplaces, is that? There's
every, and I don't want to go way down the rabbit hole, and I've got some colleagues that love to go down that rabbit hole. If you ever want to have a 4-hour special on energy markets, we've got people that can talk about that. But yes.
But a lot of potential buyers, basically, of renewable.
Because at the bottom line, so I can innovate and come up with other ways to sell this, but at the bottom line, I have PURPA. Yeah. And I can always just sell to the market, and the utility has to buy it.
Yeah.
Part of the interesting fun and challenge of this one is, and anybody who's ever run or owned a commodity business knows this, one could argue that every electron is the same.
Right.
Our job is educate the market and show them it's not
true.
That's not true.
Yeah.
And and I can talk more about that later on, about why we can get a premium for our electrons over somebody else.
Right.
But that's our second part of our business model, is just selling those electrons. The third part, and the one that is kind of like the hidden customer in infrastructure, is really it's the capital markets as my customer. Because what I offer is long-term, predictable returns on investment that also can be checked off in that ESG, impact investing, whatever you want to say. I can do good and make long-term predictable returns.
Right.
If you just buy one of these small dams, it's impossible to make that commitment. I can deliver you long-term predictable returns. Could get a drought on that river. You could have just an unlucky breakdown. Lightning could strike your powerhouse. It's happened to us.
Right.
And now you had one powerhouse, and now all of a sudden you're no longer predictable. Never mind if you had old technologies in there, that's going to make it less predictable, right? So what we do really is, if you think about all this modernization, what we're actually doing is increasing the predictability of that asset to produce energy. And then by buying them on all these different river systems, that system might have a drought, but this one's not going to. That one might have a drought, but this one's not going to. And so what we're doing is really creating an investable asset class for institutional type investors to come in and now say, wow, these guys have, actual underlying real estate, real property assets that have a cash flow. You can think of it like redeveloping old apartment buildings.
Right.
I go in, I invest, I buy them up cheap because they're beat up. I fix up the apartments, and now I can charge more rent.
Yep.
Meanwhile, I build in a whole lot of automated systems, and I drive down my costs.
Yep.
Now what I've got is I've just popped my EBITDA on that asset. Now what can you do with that? Well, someone can just take the coupon of that popped thing and run it down as now as time passes, and you have to put more maintenance capex in and all that kind of stuff. You factor that in, and now you have that coupon. Or I can actually go and refinance that at the bank.
Right.
And if I bought it for cheap and I was able to really efficiently spend capex to upgrade it, quite frequently I can get more of a loan from the bank than what my total spend was. So I can actually pull forward some returns.
Right.
So now again, I've got this wonderful ability to sell that to the market.
Right.
So now that's how I scale, is I go out and I say, hey, look what we've done. I now want to buy these next 50 assets. Right? They look what we've done before. Now look what we're going to do. And now this is what we need. Here's the equity part of that stack. Here's the debt part of that stack. And you create those.
And do you do it in tranches and batches and funds?
As a general rule, yes.
Let's for a moment dive into what I think is key. I'm excited to eventually clip this and put it onto TikTok and have this answer to my next question be the thing that hopefully brings people into capitalism. But one of my goals in life is to help people realize that capitalism can be good for them, and that anyone in here Gen Z? Okay, that Gen Z can actually be rewarded by participating in our markets. And so the key would be, in my mind, that the story you just told and your past experience to me feels real. And so, regardless of the fact that you just very economically and greedily and capitalistically created an infrastructure and asset class for yourself, you also said a bunch of things that make me believe, and then I have to decide on your track record, that you will honor the communities and the people around them.
Yep.
And you also told a story about the history where it's not like someone else was gonna do it.
No.
The way we set up the infrastructure, the way we set up the facilities, the way we set up the contracts, for better or worse, it's not like a local community. And maybe let me ask the question that way too, but it's not like somebody else is going to come make those things usable and rewarding to the local economy and, to your earlier point too, protect the resource for shareholders around it. Is that the difference between you and another player who decides to compete with you in a few years? Is this going to be, kind of part of the way we embrace this as a community? What becomes the counterfactual to someone coming in and not deciding to honor what's around them? Maybe they bake in the cost of the nuisance of the local community as part of that cost of capital, and they go, we're going to do it, but we don't give a shit about the local community next door. What stops them? Yeah,
it's fascinating. So I think it's maybe the concept is, I think it's Newton's third law of physics. For every action, there's an equal and opposite reaction. I think the most powerful lesson that I learned at the Trust is the power of we. And what you just described is if someone comes in and just goes into a shared resource experience just thinking I. And if you're going to do that, you're in for a fight. That's what you're asking for. You're asking for a fight.
Right.
If all we had was this one cup of water between you and I for the next week, right? And we both looked at that as I can promise you one of us is going to have a really, really bad day. The other, and neither of us are going to have much water. Right?
No one's having a good day.
No one's having a good day at the end of the day.
Yeah.
And so that is the most important lesson. And the problem with capital as a general rule, it is a tendency to think that I thinking is going to generate more profits for me. Whether that's short term in the case of venture capital, and I mean, in my industry, 7 years or less is short term, right? Or whether it's long term, right? And so if you look at what the Trust was able to accomplish is you had multiple, and when I mean multiple, like I'm talking tens, if not over 100 different competing forces that all wanted to have a say. And what the Trust did really well is we went around and we just consulted with everybody. You know, if we were going to do something. So what happened is that in the 1960s, the U.S. went to the Canadian government and said, we'll give you $1 billion a year if you build some dams on the Canadian side of the border to hold back water in the wet season, let out in the dry season. Because we've got these big dams down here in the U.S. We can't generate power part of the year and we're flooded the other part. If you guys do that, we'll give you $1 billion. It's called the Columbia River Compact, Columbia River Treaty. Fast forward 30 years, it was up for renewal in the mid-90s. And that's when I got involved first as a volunteer. And the people of the region that had these dams put on them, we lost our prime forestry, agriculture, and tourism lands. First Nations people lost their, traditional fishing territories. I mean, everybody was affected. And so now when they're up for renewal, we're just like, now they had the right to just renew. They didn't have to consult us at all, but that's not usually a good idea if you want to be reelected for something. And so working with provincial governments, with local, all the mayors, they were fantastic, getting behind this thing. And again, it wasn't always agreement. It was, well, we want this, we want that, we want this. And then figuring out how, okay, but if any one of us just demands that we only get what we want, none of us will get this greater, broader thing. And so it was being able to put aside some of those things that would maybe we thought were in our best interests, but to enable the greater good, that rising tide raised all the boats way beyond what we thought we would ever have possibly, could have achieved.
Totally.
So that thinking, that changing the paradigm for how you look at a shared resource makes us different and makes it really hard to replicate for a financial player because they're just not that's just not generally how you're wired when you come at it from that perspective.
When you're generating track record, history, story, referrals of a kind along the way.
And so if you look at our mission is to be the most trusted 24/7 provider of 24/7 renewable energy to rural America. That is the brand promise. And the most important word in there is trusted. And how you become trusted is not by, a lot of talking. It's by doing a little talking, a lot of listening, coming to a common understanding, and then delivering on your part of that. Common understanding.
Which I assume was also that's what I was going to ask at some point, but it feels important compared to the rest of the conversation we're having. That end of the licensure period, this demonetization that happens at these facilities because essentially all of those 40 or 50 year terms are coming up. That in and of itself is evidence of the lack of follow-up, right? It's like it's not an understanding. Now, let me ask one question about that. Who are the players in that decided they didn't want to get re-involved, and why would they not want to get re-involved? In other words, I would have assumed that they were the ones, whoever were running these facilities, owned and operated these facilities, and were maintaining them, would have been the ones to realize, hey, at the end of this 40, 50-year term, we know this thing best. We can install the new equipment and automation, and we want to be the ones to get the next contract up. who were they? What did they not realize? Or is it just so many years past, it's a different generation?
That's for the most part, as we all know, if you were to just punch into Google or something, how many companies are over 20 years old?
Right.
How many companies are over 30 years old? How many over 50 years old? So there's, in many cases, the companies just don't exist anymore. They were bought by something else. They're rolled. Part of them was rolled up into something bigger. Part of them was discarded. Part of them. So it's the dregs. And so typically what happens in any large infrastructure is once it goes through that cycle, the larger ones end up becoming the cherries.
Right.
And so those are the ones that people are going to invest in because it makes sense.
Right.
It's a 100 megawatt facility. It's the Niagara 1 gigawatt facility, right? It's these kind of things. You never have to worry about those because they're so, singularly massively impactful. That also makes them very efficient to operate because it's all in one, that much power is in one place, right? And so that you can take a simple business model, you can just keep doing what you're doing.
Right.
The other thing is those larger assets typically quite frequently end up in rate-based entities. So that means that the more something costs me as a utility, I can just jack up my power prices to you.
Right.
And so they can keep investing in safety and those kind of things because their prices keep going up. It's these smaller independent power producers. So these are the ones kind of with, they might have bought 20 of these, 15 of them, 10 of them. They're not the really big companies. They're not the utilities. They're these small independents that kind of got into it. Also, if you think about somebody who built something in the 80s, how old are they by the time you get to the 20 teens?
Right.
We're buying plants off of some wonderful people who did a great job building those assets, maintaining them right up until the end. And now they're just like, hey, Matthew, I'm retiring. I should have retired 5 years ago. Do you want an asset?
Right. It's so interesting because I think, again, this goes to like the realization of who else is there that a lot of people need to have about these sorts of conversations and who's going to pick up some of these pieces. And there's only so much we can do from a community perspective where we need to let capital and then the decision becomes as consumers and voters, et cetera. It's like, okay, who are you going to back? And what personalities are you going to back? But let's zoom in real quickly, then I want to zoom out because we could talk about this forever. One more question on the business, literally, then I want to go to foundership and venture. When you're doing this literally, and you've got these facilities that you're now operating, what's the model from a technology and automation perspective from kind of Manhattan, compared to the facilities? How much of this is exactly what you said? Hey, we just need to install something new. Versus opportunities in computer vision and AI. Again, a lot of this feels like it needs that roaming, traveling crew on the ground. But what else is going on that people might find interesting?
I think one of the things that I think gets really neat for us is the intersection between the actual generating of power and the sale of power.
Right.
And so we have a team that is looking out and mapping. So in these energy markets, you have what you call different markets, to be honest. You have, the spot market, which is right now we need X amount of power. Then you have the day ahead market. So tomorrow we think we're going to need this much power. Then you have like the month ahead market, the year ahead market. So you have all these different markets. You have capacity markets. You have REC markets, which are renewable energy credits. All these different markets for things. Right now, there is a level of sophistication in it, and it's about to get even more sophisticated. Because what's happening is we've all heard about Microsoft, for example, wanting to offset their carbon, or Facebook wanting to offset their carbon. So let's think about that for a second. Let's take a data center. Does it use power only when the sun is up?
No.
The answer is no.
Yeah.
Right? So it's using power 24 hours a day, 7 days a week. We could install as much solar as we want onto the grid like this, and we could not provide 24/7 green power. So you still need that gas turbine running from the time the sun is starting to set until the sun's really kind of picked up back up on the horizon again, no matter how much solar you throw. Right? The wind starts to kind of, it has a tendency to blow a little harder near sunset and that kind of stuff. So it could extend it a little bit more. but generally things calm down, in that overnight period. And so you still need gas. Well, people say, oh, now it's just battery. Do you know how much battery we would need to be able to just power, one of those things, through the night off of that stuff? So it's just not, entirely buildable. And so what you have actually, what we're talking about now is matching demand with supply. If you're really going to be a modern green company, you're not really solving the problem by entering into a PPA with a solar developer because it's only going to solve part of your stack. You're not actually helping decarbonize the grid. You're helping take it off of that one place, but that's the easy part of the problem. What are you doing to decarbonize in those other hours? And so figuring out what the markets are realizing is that an electron, and this goes to our statement earlier, an electron at 2 a.m. could be worth more. I'm not saying it always is, but could be worth more than an electron at 2 p.m. In some markets, during the summer right now, power prices are negative. That means there's enough solar on that they're actually having to curtail, which means tell people we want to set a price that's going to make sure you turn off your panels. And so they're billing you. You're losing revenues now because you've got that solar panel on the network. So things aren't as easy as we just kind of see on the surface. And that interconnection, being able to figure out where that most valuable electron is, and then getting the plants to store up enough water to be able to burst at that time when that electron is needed. The way our whole electricity works, that light right now over there is electrons like little, think of them like pool balls, right? Are pouring out that wire into that light. The moment you turn off that light, we have to stop on our side, simultaneously stop producing new electrons. Otherwise we overload the grid. If you turn it on, I have to instantaneously put another one on. So we have to keep pressure on that system the whole time. Just enough pressure that if you turn it on, one falls out. And if you turn it off, that it doesn't bust the thing. So it's a really complicated system, and figuring out how we can game that to the ability to make the most possible revenues and have the greatest impact with our technology, which is helping the world solve that 24/7 problem. Is what gets us up in the morning.
The regulatory framework around all of this and the way in which some of these credits work and subsidies work and all of that, are we doing a poor job, a fine job, a good job in the US? And maybe, again, it's going to depend on the state, but would you go, it doesn't matter, this is a dumb question, and, people in this space from a private perspective will always just have to deal with something regulatory, or is there some other answer to how we doing there?
I always would hope that we could do a better job, right? And I think that's just part of being an entrepreneur. Is that there's always an improvement to be made, And so I appreciate deeply the thought of the people that have gone in to try to create the right incentives and frameworks to get companies and entrepreneurs like mine and like me to invest in this space, because it is so important, as we all know, to the quality of our lives and our children's lives, and et cetera, going down the road. There are definitely some places we could be better. So far, we've been trending in the right direction. Because the problem is, I also have respect for regulation, especially in my industry. There have been dams in the U.S. in recent times that have washed out in Michigan not that long, 3-4 years ago. If we didn't have regulation, there would be a lot more of that, and it would impact a lot more people, in really negative ways. So there's always this balance, right? I don't want to, those hands, I don't want to bite, because they're important to our industry. They're important to this brand of trust. They play a key part of that in making sure that we hold ourselves accountable and that we invest in those things.
This is interesting. I used this phrase once, and maybe I need to start saying it more often. It's the cost of existence. If we think about some things are cost of capital, as long as we're not doing such a bad job, then it's just cost of existence. And to your point, we're always going to want it to improve. But this is what it's supposed to be.
And sometimes we err more on the side, maybe we're overly cautious and we hinder innovation. Other times we lean too much on innovation and we then
suffer consequences.
Suffer consequences for that. And so, and especially what's been really fascinating for me on my own founder's journey is that having led software companies, manufacturing companies, service providers, venture capital firms, the energy companies now, some of those things have swayed way more towards innovation, right? It's like the foosball dynamic, right? Where you got the foosball table, guys are, and it's just crazy ideas and you're trying to corral those and that kind of stuff. That's kind of, the one extreme. Getting into energy and getting into that place where people depend on you and where your brand is not, your brand is no longer, we will be the most innovative X thing that you're out there, or we will do the X thing the best. This is now, we'll be the most trusted.
Yep.
And so making sure that as a leader of that company, I find that I have to listen a lot harder to the operations and the regulatory people than maybe I'm more naturally inclined to as an innovator and an entrepreneur. And so part of my journey has been to make sure that I can do as good a job as I led those companies as I did some of the other ones as well.
Well, it's the mantra of the modern generation of venture capitalists to hate on experts and think that expertise is dead. And it sounds like it's, I find that wrong, generally speaking. And then it would be especially wrong of them. They'd almost fail, most of them, flat on their face if they were attempting to build in this space. So a few last questions, because we've been, my curiosity has let us go along on the business side. I do want to get some founder and VC things though. Let me actually start there. You've been in so many, sub-industries, right? Private equity, commodities, energy, venture capital, a founder many times over. What do you think venture in particular gets wrong when they approach this space of, let's say, energy and infrastructure? It feels like we have few venture capitalists who play in the space, A. It feels like the ones who are most popular and successful venture capitalists, I feel, wouldn't understand the space and wouldn't understand how to create long-term assets or work with communities. Why do you think that is? What is it about venture capital? Because again, you sit on so many, you have a lot of different birds eye or nests you can look from. What is wrong with the modern venture capitalists that they have not actually become an efficient player in this space? What's the trait flaw in this demographic? And I'm the one calling it a flaw, so you don't have to.
Yeah, it's really interesting. I don't want to say that there's a flaw. So if you look at any innovation system, right? Part of that innovation system is the capital markets part of that. And when I say capital markets, that's can be debt, it can be equity, it can be all those things. That's part of that ecosystem. The challenge that has been in this space is not so much so there's been really mature what I call project finance, right? I want to build a solar project. I want to get that stuff done. There is some maturity around investing in the entrepreneurs, the kind of the top co that now is creating this developer, if you will.
Right.
There's not a lot of it, and it is fairly cyclical, but there is some maturity there. The challenge, I think, becomes when you're trying to do something a little bit new. So if all you're doing is a solar startup or a battery storage startup, and I don't mean to diminish those at all, but quite frequently they are kind of, maybe just regional or they've got some kind of subsegment of it. There's a rinse and repeat model for that. When you try to do something new, everybody wants to talk to you.
Right.
Everybody's just like, wow, that's cool. I've never, what are you, a hydro redeveloper then?
Right.
Like you redevelop old assets and and then you want to think, if you're on the capital side, you want to think, what models can I apply here?
Right.
And now you want to keep having the meetings with the entrepreneurs because you think it's just the coolest thing you've heard in a long time. And everybody wants to chase the shiny object, right? So you get a lot of meetings. But getting someone over that to where they'll actually invest because you are unique and different is a little tricky. So that's where it really goes back. It's not a flaw necessarily in the venture market or the venture capitalist mindset. It's
mismatch of timelines almost.
Mismatch of timelines, mismatch of asset class.
Right.
Trying to understand and be able to figure out, and when we were talking earlier off camera about this idea as an entrepreneur where when you're raising capital to actually look at it like a sales process and actually segment your market, right?
Yep.
Trying to figure out, who's my segment? Who would actually invest in something like this?
Okay, so let's go to two other quick questions. From a founder's mindset, what have you become good at that has allowed you to build this? I think it's really interesting to think about I mean, and maybe it's the same thing, right? It's timelines, it's ability to understand who you're selling to and matching asset class to the portion of the problem. So maybe that's the answer. But what else is given you? Because if I took a 22-year-old Stanford grad and swap them out with you, I assume the company would fail. Might not be true if you find the right Stanford grad, but most of them, I think, would be applying it. They've learned something different as to how to operate a company. What's interesting and novel about running this that people might not realize from the outside, that also is why you're the founder of this company?
I've developed a lot of experience scaling organizations that are focused on social good. It hasn't mattered really what the industry is. That's one of the major realizations for me. That there are a set of processes, systems, ways of approaching growth and scale that transcend whatever it is that you're working on. Within that, there are a litany of things that you kind of go through, and I won't bore you with all the details. For me, where it starts out always, and that has given everything that I've built, if you think of it like a building, the kind of the core foundation of what I build, is I start out, I see a problem out there, and then I think, what is the promise that I could keep that would generate the most impact? And I think of it in that way. And it was it happened at a kind of a young age. And we came out of the trust, actually, in thinking very deeply about what the brand promise is of an organization. And it stayed with me kind of ever since. And by starting that way, it makes me a different entrepreneur. Yeah. Because I start from trying to keep a promise to somebody. Yeah. And then what I do is, from that promise, I start to then think, I get excited about it. I think, wow, what are the impacts? And I think about the social impacts. I think about the economic impacts. And if I change that promise just a little bit, maybe the economic impacts get bigger, and I can maybe look at how I might harvest those. And when they get to a certain size, I go, wow, that would be an amazing promise to keep. And if I kept that promise, it would have all these impacts. Now, what would I need as an organization in order to keep that promise? And by starting from that framework, it flips everything on its head. And what's been interesting for me, and watching how entrepreneurs have changed over time, and again, I don't want to say all of them are like this, but so frequently we as entrepreneurs have, some kind of chip on our shoulder or hole in our heart that we're trying to fill. We're trying to be something, it's about, at some level, it's about us. Right. And when we're failing, it's about us. And our identity is tied to the thing that we're creating. Right. Rather than putting yourself in service of something. Right. And what I realized by starting out my entrepreneurial career in the not-for-profit world is that what was so rewarding about that is that, and made us so successful, is we got not just 10 or 100, but thousands of people bought into a promise and working together to deliver on that promise, and be excited about watching the fruition of the keeping of that promise. And so if I look at what has really made me successful, when I have been successful, I've had some that haven't worked, is that notion that I'm in service then to this. Once I create that promise and we start building something, I'm in service to that promise. And that means that comes a time that I'm not the right person to actually be leading the next charge. I separate myself and my own identity from this thing that I've created. And that creates a level of distance. It creates a level of surety for everybody else around that promise. So that one of the things I'm most proud of is not the exits, but actually the fact that I've still got 3 organizations that I was integral in co-founding that are out there having, major impacts on the world, and they're still spinning. Right. So you can think of it almost like being a sculptor. Yeah. In that what I help to do is start to sculpt a rock, and then get other people who kind of bought in and are excited about that idea to help sculpt that rock with me. And then at some point, that sculpture, which is going to go on and live and change and still some more, or that building that you've designed or whatever, is going to go on and now live on generations in all sorts of different ways, and hopefully react to its environment in a way that it goes on to continue to deliver value. And if you can do that, then I think that's what you then are really, as a craftsman of company building.
It's funny how much of that is a mirror. You talking about the way you view the sculpture and that long-term thing that might exist in the world. Also true of dams and waterways and things of that nature. It's a mirror to it. And another thing that I think is really interesting about what you're saying that I feel like entrepreneurs get wrong now, when you start from the promise first, like what you're literally saying in a good way is saying, I start from the promise and I figure out how to monetize the promise. And it's when you flip that, and I think a lot of entrepreneurs and VCs in this generation flip that and they go, what's my monetization? Then what promises do I need to do to justify the monetization? And that's when it goes wrong, right? It's like, great, now you are fighting communities and it's not everyone's rooting for you. Like one of the interesting things about Starbucks right now is it's going through change. Mavron is our primary investor in Series A, and the primary LP is Howard Schultz. I like Starbucks, but I think one of the things that's happening, he's not at the helm anymore, and they've gone from being a third place, a cafe where you can sit and have a coffee and have a conversation, to being more of this coffee provider. It's a different promise.
And they're putting olive oil in our coffee. That's good.
Exactly. Olive oil, butter, all sorts of weird things. And so when that promise changed, what's interesting is for a while, it felt like Starbucks people were rooting for, and it was a culture thing. And everyone was invested in kind of like, I like this too. Now that the promise has changed, maybe without people's permission, people are going, I'm not for this anymore.
And now, and that is the core of it all.
Yeah.
And again, hats off to CEOs who have to come in and change a promise because the world has changed.
Right.
And you have to be open to that.
Well, the monetization is also changing there. And that's the hard problem that you have to give exactly the operators credit for, is if they're failing at it, it's not just because they decided the promise doesn't matter. It's that the monetization changed. And now you have to go, okay, I don't know. I'm thinking about both at the same time now. They exist already. I can't recraft them. How do I handle this? That's so interesting.
Right? And so even if you look at Google, who came out at one point, originally said, do no evil.
Yeah.
Right? And now that's gone.
Yeah.
Right?
Yeah.
They just taking that, how hard that would be to lead that company through that change.
Right.
You know, I'm absolutely convinced that there were a number of people that left Google the moment that happened.
Right.
And I don't just mean like their staff, but also, you know, there might be customers that, you know, decided to leave Google at that point in time too.
It is all a partnership again. Like it's people can decide. It's long-term games with long-term people.
Yep.
Or play the short-term game, but then you have to be really good at it, and you might not feel so good at the end of the day. Those are the two options.
Yeah, absolutely.
You know, it's interesting. There's this other unrelated thing that's happening that I've been talking about with folks in tech, where it's just like the inability to have a conversation. And not just on a personal level, but like I'll use the example of Facebook and ads, where like constantly Meta's out there going, we don't sell your data. We don't sell your data. What they really mean to say, and if they could actually sit with every consumer, is no advertiser can buy your data, but we have a platform they can log into and they can run an ad with filters such that they target you. So we're not literally giving them your data, but no consumer wants to listen. And Facebook doesn't know how to get them to listen. There's no trust in that relationship, which means they're on this defensive where they're never actually defending themselves. And so we have this disguised conversation that few people understand.
Inauthentic. Transaction. Yep.
Yeah. It's interesting because of how serious and infrastructural and in the real world your problem is. It maybe is giving everybody more of an invitation, regulators and community folks and you, an ability to sit down and talk about it.
That's correct.
I wonder how we can bring more of that into other parts of. I don't think there's an answer here that's easy, but I love that that's possible for you.
Yeah.
And I hate that it's not possible right now, because I actually don't think it's just, for example, Facebook's fault. I think maybe at some point they fumbled the communication, but consumers were also not willing to listen. It's like, you're selling my data, and you can try to educate backwards as much as possible, and they did a poor job. But they're not the only example of, I think consumers also don't do. When Google released the image model, it was like the third version of DALL-E, and it was like generating Black founding fathers. So it was like, there's a product manager at Google who did not mean to do anything wrong. And that's what happened. But no one wanted to have that. Some people had bad intentions and ruined that conversation.
Yes.
But other people also weren't willing to listen.
Yeah. No, and we see that a lot. We see it in the renewable energy space as well too. Everybody wants to see themselves as the hero.
Yeah.
And the hero has to be unflawed for some reason.
Opposed to something.
Or opposed to something.
They have to have the enemy.
Or, yeah, absolutely. That's another component of it too. But I'm more interested in this idea that, you know, I'm a solar company, therefore I'm only good for the climate.
Right.
You are a nuclear and you're evil, and you're hydro and you're evil, and you're gas and you're evil. And again, this polarization of everything, right?
Yeah.
and again, I don't want to pick on the solar guys. Everybody kind of does it. But I think what we can bring, if one wanted to bring the river into this conversation, the river has been around for thousands of years. The dams have been around for, hundreds, well, in some cases thousands of years, but I wouldn't want to own that dam. But hundreds of years. We've been around for a long time. Our industry, because of that, the charlatans get chased out.
Right.
And so in a way, we have something unique, I think, to offer all of the other entrepreneurial ventures around us, which is because of that, we will have to rely on authenticity as a source of our power, right? Because that's the only way you can transact. If you don't have that, if you don't have trust, if you don't have authenticity, you can't transact with your staff, with your communities, with the regulators, with anybody else. You're not going to last.
Yeah.
The capital markets, all of that stuff. And the problem is that behavior isn't always incentivized. So because venture capital runs on such short, I'm still going to go back to software or these tech kind of things, has that short time horizon. You can almost say, how do you would have to accelerate trust, because trust comes from watching people do things over time, right? The question then becomes how do you accelerate trust? How do you accelerate authenticity? And those aren't questions that people really want to engage in, when what they're really looking at is how do we accelerate the exit?
And refund Adam Newman. It's just like a perfect example of like the time horizon venture capital does not allow us to see and embed a record in our brains in the same way. It's a fantastic conversation. Thank you for it.
Great. Thank you very much.